All right, good morning, everyone. Today is May the 7th, 2025, and welcome to the 7 Investing Podcast. My name is Simon Erickson. We're going to be digging into two more companies today, Palantir Technologies and Upstart Holdings, two companies using AI that are completely knocking it out of the park. And yet, curiously, during this volatile earnings week that we've been seeing, both stocks have been selling off. We're going to be digging into both of those in just a minute. But before we get started, I want to just say how excited I am to be firing back up the 7 Investing Podcast once again. Really, one of my favorite things about 7 Investing has always been progressing the investing conversation out there. I think that as a community of individual investors, we should be seeing things that are right outside of perhaps our own circle of competence. And the podcast is just such a great way to be expressing a lot of those things, sharing them with other people, discussing them out there in kind of an interactive forum way. And so this is something that I'm really excited to be starting up again and rebooting the 7 Investing Podcast once again. We're going to start this off with two companies, like I said today. We're going to be talking about Palantir, first and foremost. But then we're going to be talking about Upstart Holdings. I do have an exclusive offer that I'm going to talk about here in the middle. And if you have any questions, we now have a live audience and a live chat. So please let us know if you have anything you'd like to contribute to the conversation. Again, love this format. Excited about the 7 Investing Podcast. So let's jump right in. The first one that I want to talk about is Upstart Holding. Palantir Technologies is going to be the first one we'll talk about. This is a company that has completely nailed it during the last 20 years. And I want to talk about earnings in a minute here, but perhaps it's useful to go back a little bit back in time and to discuss why it is that Palantir won. What did they do that made them so successful? Why are they in the position that they've done so well as a publicly traded company? And so let's go back in time 20 years. As a company that's been around since 2003, got its start with the United States government, specifically the Department of Defense, because Palantir was very, very good at finding the needles in haystacks. The government has a ton of information coming from a ton of different sources, and Palantir was able to organize a lot of that and find the signals that they really thought were important, especially when it came to military intelligence. And so a lot of this they did this kind of in the cover of secrecy, right? A lot of this was stuff that you couldn't publicly discuss when it came to military intel, but Palantir built a lot of credibility in kind of this platform that organized a lot of this information coming from all these sources, didn't have a really good way to put it all together. They built a topology of information and then built the actionable insights on top of that. And so this was a product called Gotham. They've now kind of gone on top of the government-built one, and now they built something new called Foundry, where large commercial enterprises started saying, yes, we want to do this same thing. I mean, if you go back in time 2 decades, this was kind of the early start of big data. We now had platforms that large corporations were collaborating a lot of information on. Whether that be SAP, whether that be Oracle as a database, whether that be later on Salesforce and the move to the cloud. And as these tools got more and more modern, these legacy systems were very powerful and they were very useful and valuable, but they weren't modern. They weren't the digital tools where everything was moving into the cloud and becoming more and more interesting to these large companies. And so a lot of vendors would come to these companies and they'd say, hey, why don't you just rip out SAP? Or why don't you replace Oracle? With something that we built from the ground up that is really cloud native. And companies were interested in that. They wanted to use these tools to mine information and be more efficient, but they didn't necessarily want to rip out all these systems that had been around for decades that they'd already trained all of their employees on and were already very much embedded in their monthly workflow. And so Palantir built upon the platform that it already had with the U.S. government and said, we can build an operational intelligence platform that sits a layer above your legacy systems, whether that be for tracking sales and marketing, whether that be for tracking inventory and operational efficiencies and things like this. But you don't have to rip it all out. Just let us kind of take all the data, put it into this operational intelligence platform, build this topology, which kind of shows the relationships within information, and then give you some actionable insights to make decisions off of. It was the perfect timing, right? To have the credibility with the government, right at the same time the companies were interested in big data, right at the time that things were moving to the cloud. And then now with artificial intelligence, it's really just the perfect combination of all of these things, a confluence of events and technologies, that now the artificial intelligence platform that Palantir has sits on top of it and communicates with users through a large language model, we can just ask simple questions. Where are my most profitable customers and how am I marketing to them? Where are the inventory jams in my supply chain? Things that might be, conversational. You can get an actionable insight to help you make a decision off of. And so it's kind of a no-brainer if you've got a global supply chain or you're a large enterprise, you're somebody like a hospital or an insurance company that's got tons of information, but you don't really have a user-friendly way of mining into it. That's what Palantir did over the last 20 years. And even though it's only been in the public markets for about 5 years now, it's off to a great, great start. And Seven Investing picked up on this in November 2020, right? We recommended shares when they were at $10 a share. It's a 10 bagger on our scorecard. I'm still very excited about where Palantir is going. So that's a little bit of a background. Let's look a little bit more at how Palantir is doing here in this quarter, specifically for the first quarter of 2025. Thank you for the live comments that are coming in on the live chat. I am able to see them now. It's kind of excited to see this interactive format. But let's look at Palantir's first quarter 2025. Really, again, excellent growth and extremely high expectations. We've now got 71% year over year U.S. commercial growth for Foundry, right, in the first quarter of 2025. And that is something that is not only impressive, but is accelerating. That's up from 64% growth in the fourth quarter, 54% growth in the third quarter, and then 40% in the first quarter, 2 quarters before that, right? So not only is revenue growing, but typically law of large numbers will tell you, hey, as you get larger, your growth rates have to get smaller, right? It's just impossible to keep growing to infinity if your growth rates keep getting higher each and every quarter. But that's exactly what Palantir is doing right now. They signed 139 deals of at least $1 million. Again, this is subscription revenue based off of licenses, based on the number of seats and the number of data that's being used. 139 deals of worth $1 million, 51 deals of worth $5 million, 31 new deals worth at least $10 million. And the overall customer count growth is still growing at 39%. This is exactly the dream scenario for an investor, where not only are you adding 39% more customers in year-over-year comparisons, but your existing customers are using more and more of the platform and signing more and more large deals. It wasn't that long ago we would talk about how excited we would to see, $100,000 annual recurring revenues or 1 million deals were kind of a really big deal that companies would get excited about reporting in their quarterly reports. Here it is, Palantir is reporting 36 deals worth $10 million. That is simply amazing. It's one of the reasons that the market has got so much confidence and optimism in this company's future right now. In addition to the customer count growing so nicely, the U.S. total contract value up 183% year over year. That's up from 134% the previous quarter. Continues to accelerate. What do you see when you see accelerating growth in a short period of time? That's the S curve. That's where growth continues to grow at an outsized pace. And the demand right now for Palantir, specifically the artificial intelligence platform, is off the chart. The U.S. commercial enterprises just really love what they're doing, and there's no doubt that they're lining up to get this set up. And the setup time is, Palantir says incredibly quickly from very first install to an actionable project within 5 days. This is not a corporate software that you need to go rip everything out and figure out how you're going to retrain everybody, and it's going to take 18 months to do. This is something you can layer on top of the data you already have and start showing your employees how to use it within a week. And you don't have to be a super sophisticated software developer to do it anyway. So the numbers are showing very, very well. The adjusted free cash flow when you're excluding stock-based compensation, was $370 million. That's very, very strong. 42% margin when it comes to free cash flow as a percentage of revenue. And then the guidance was just very, very strong as well. They're saying full year guidance, they've now raised to $3.9 billion in revenue and $1.7 billion in free cash flow. That's a 43% free cash flow margin for the full year 2025. So firstly, let's just in my estimation, this was a fantastic quarter by all metrics that you can look at. Growth rate at the top line is very, very strong, extremely profitable on the bottom line, especially when it comes to cash flow. And then you've also got very, very strong guidance that they just increased. By all accounts, on the fundamentals, Palantir had a fantastic first quarter of 2025. So then, Simon, your natural next question is, well, why did the stock sell off? Why is it down, almost 10% after recording these earnings? And the answer is simply valuation. This is a stock that, was very recently selling at 650 times trailing earnings. Came down a little bit, but it's still very expensive. At $109 a share, Palantir is now selling at a price to sales ratio of 66x on a trailing basis and a price to free cash flow of 151x, again on a trailing basis. That's among the most expensive valuations that you'll see in the market out there right now. Fantastic execution, but at some point you've got to say valuation really does matter. Palantir is not only not cheap, it is sky high expensive. And you've got a ton of confidence with Wall Street, right? You've got basically everyone that's following the stock saying, yes, this is a great company. We recognize the growth. We see that they're increasing their guidance. But at some point, you have to give back a little bit and say, okay, even at $110 a share, are we willing to pay 66 times sales for a best-in-class company? I think that a lot of people are, but again, this is a very volatile stock. We have to admit valuation has to play a role in. When you see the market selling off, it's one of those that I think it's a no-brainer, in my opinion, to go out there and grab up shares. And then when it gets too expensive and ahead of itself, and we're selling at 650 times earnings or 200 times trailing free cash flow, you might say, yes, okay, it's hard to get a really good investment return when you've got sky-high valuation and expectations already baked into the stock price. And so I'm going to set, I've done a little bit of valuation work on this. I've discussed it with the 7 Investing Community Forum. Just to give a sneak peek at it, I think that a good target price for Palantir is $85 a share. That's significantly lower than wherever we're trading at this morning. I think we're back at around, over 100. I haven't looked at it this morning, just recently. But, recently $110 a share. I think that's moderately overvalued still. At a target price of $85 a share, we're still selling at 50 times sales and 120 times free cash flow. But for best-in-class company like this, where it not only continues to hit its guidance, but then raise its guidance, you have to pay a little bit of a premium for a company like Palantir. There's one last thing that I'd like to talk about before we move on and look at some other things, and that is the stock-based compensation, which has always been a red flag, or at least a yellow flag, that investors should be keeping an eye on. First of all, the company's leadership, between CEO Alex Karp and Peter Thiel, is definitely certainly on the board and a key part of the founding team. They're going to remain in control, and the rest of us are along for the ride on this, at least in terms of making the decisions that would steer the future of Palantir. And just the other thing that I have to bring up here is just the astronomical stock-based compensation that Alex Karp has been exercising in the last couple of years and continues to exercise right now. We will talk about an executive that's in a really large company, of over $100 billion market cap. We'll typically be okay with them making $10 or $20 million a year in stock-based compensation, right? It's negligible in terms of the market cap, $20 million versus $100 billion. But above that, you start to say, okay, is it really worth having an executive that's making $50 million or even more than that for a company, even a very, very high quality? Let's look at Alex Karp here. Last year, I dug into the proxy, and he's primarily rewarded and compensated not through salary. Salary almost doesn't matter for Karp at this point, but through stock awards and then through options awards. The value that he realized in the sold stock that was issued to him through stock-based compensation in 2024 was $138 million. And that's a lot of money by any stretch of how you look at it, right? $20 million versus $138 million of exercised shares that he sold out there in the public markets. That's a lot. That's a lot for Alex Karp. But then look at this. This is something that just kind of blows my mind in terms of the options that are awarded to Karp, and then he immediately exercises and sells. He sold 36 million shares in 2024 through options that were granted to him. The total value on the exercise of all of those options was $1.4 billion last year. This is in a league of its own when it comes to excessive stock-based compensation. You have to keep in mind, Karp, fantastic. One of the co-founders of the company, certainly one of the most important reasons for its success, in terms of the relationships that they've built out, in terms of the contracts that they have. But $1.4 billion of stock-based comp, man, my goodness, that is expensive by every stretch of the imagination. You got to kind of keep that in the back of your mind. This is not the most shareholder-friendly team. They are taking care of themselves when you're getting $1.4 billion with a B in stock-based comp tied primarily to options. And Karp's net worth is now worth north of $11 billion, almost entirely from Palantir stock. So something to keep an eye on there right now. A comment from the live stream here: Karp's connections with the U.S. administration perhaps justifies his outsized stock-based compensation more so than other executives. Yes, great point. Karp is instrumental to the success of Palantir, but I haven't seen any other CEOs that are anywhere near exercising $1.4 billion worth of options from stock in a given year. So we're keeping an eye on there. Karp does have an automated plan set up. It triggers based on stock prices. That's something you can't fault him at. It's not like he's seeing the stock go up and he just immediately decides to hit the sell button. This is something that's highly automated, but still a lot of compensation that I think investors should keep an eye on. So that's Palantir. PLTR is the ticker for that one. If you do have thoughts about the incredible growth rates, and then also the incredible high expectations in the valuation, and also the incredibly high stock-based compensation, this is such an interesting one, right? It's such a controversial stock in a lot of ways. It's dealing with things that sometimes are a little taboo to be talking about. It's certainly very, very embedded with the government, but now it's kind of moving into the enterprise. It's a fascinating company. It's a fascinating stock. We've been in it for 5 years with Seven Investing. I still think there's plenty of growth on the horizon. Just be a little bit careful about that valuation. And so we're going to move on. The next company we're going to talk about is going to be Upstart Holdings. But first, before we get into that, I'm actually excited to announce a new partnership that Seven Investing has just begun. And we're going to announce it for the very, very first time here on this show, on this live stream, and on this podcast. The partnership that Seven Investing has is a company called Profit, not Profit, which we typically talk about when we're saying profits for investing-related reasons, but Profit, Prophet. And the website is useprofit.com. In fact, if you go to useprofit.com/7investing, you'll get a special exclusive offer from the partnership that we've struck up. Let me talk a little bit about why I'm excited about this and why I'm promoting this, because I'm actually being very guarded about the other companies that I'm going to promote on the show. I'm not just going out there and trying to stir up any interest in anything that I haven't thoroughly vetted. This is one that I really like. I've known the co-founder for several years now, from my time even back at the Motley Fool. He's really onto something really neat here. And the quote that I've used to describe Profit is: Profit's AI model is a quantum leap for the investing industry, and its outperformance clearly proves it. It is the perfect tool for passive investors who have limited time but want actionable ideas to build out a long-term portfolio. That is not a marketing script. That is my own description of what's going on here. And I'll tell you why I'm so excited about Profit. What they're doing is they've used AI to codify a lot of fundamental academic research related to investing, and then they're going out and they're hunting for stock market ideas. AI has been involved in the investing industry, not just for months or for years, but for decades in some form. The formats were typically just trends that were being noticed in technical analysis, right? The software, you would see an arrow pointing up saying buy low, or an arrow pointing down saying sell high. It would typically just look at technical analysis and look for insights into trading patterns. That is not actually what Profit is doing. Profit has actually codified blue ocean strategy and the innovator's dilemma and all of these academic research from Clayton Christensen, from the academic professors that kind of built these things, and said, hey, if we were going to use all of the insights that they had, which stocks are exhibiting those behaviors in their fundamental results right now? And so they've got 5 terabytes of data. What they do is they give you a stock portfolio of 10 stocks at the end of the month, and then they rebalance passively through actionable buys and sells. They've been doing it for 16 years, and it's delivered more than a 21% compound annual growth rate in terms of annual returns, and it takes 5 minutes of effort each and every month. Now, why is this so interesting to Seven Investing? Why am I talking so excitedly about Profit here? Because we actually have a partnership with a couple different factors that are a part of this here. The first is that Profit is not actually giving any context in the stock. It's letting the AI engine do its thing, and it's trusting the AI engine, which has shown through past results that it works. And then they've also given the okay for Seven Investing to discuss all of the buys and all of the sells in our own community forum. This is a really interesting 1-2 punch, because Seven Investing, one of our value propositions, is the back and forth discussion with other individual investors, whether it be from this podcast like you're listening to right now, whether it be our Seven Investing community forum, where every single day we're talking about stocks out there, it's going to be interesting to sprinkle in some new ideas for us to discuss with 7 Investing's audience. The second is I've looked at the recommendations they've made, and they're very different from 7 Investing. A lot of them are international stocks. A lot of them are small cap value stocks. A lot of them are stocks that I necessarily probably wouldn't be recommending for our own scorecard. And so it's kind of a great way to expand our peripheral vision. And then the third thing is we kind of had a back and forth negotiation. I said I would really be excited to introduce this to my audience, but you've got to give us a special deal. Typically this is a $299 a year product. They've actually said we're going to give you $50 off the annual rate. We're going to give it to anyone who's listening to this podcast and goes to the website useprofit.com/7investing. If you sign up on that site, it's $249 a year, $50 off the regular rate of $299 a year. So about $20 a month for the AI to do its thing and give you actionable stock ideas. But then it got even more into a battle of, hey, I want more than that, guys. I'm glad that you gave my audience $50 off, but if we're going to do an exclusive partnership, I'm going to talk about you on my show. I want to give my audience even a better deal and more of a reason to sign up. And they said, okay, Simon, how about if we give the first month completely free? I said, 2 months free. And they said, okay, you got it. So you get your first 2 months free, absolutely zero cost to go try it out. If you go sign up again, useprofit.com/7investing. You see all of the stock recommendations it's ever made. You see the rebalance at the end of every single month. And you're not only getting $50 off of the regular rate, but you're getting your first 2 months for absolutely zero cost. And the deal is good until 7/7/2025. So up until July 7th, 2025, go check out Profit. You have really nothing to lose. There's zero cost up front. I'm excited about this. Again, I will vouch for it. I think it's a really good partnership that's going to go a long way. A kind of interesting combination of AI and technical trading along with fundamental analysis and the back and forth discussion that's interactive that 7 Investing has done so well. So excited about that one. Let's just jump back into some of the earnings here. Another company that I really am following closely is Upstart Holdings, UPST for this one. This is another company using AI, doing a fantastic job of integrating directly into their core platform. What Upstart is doing is actually kind of rewriting the FICO score for credit worthiness. It's going out there and it's helping small lenders make loans to credit worthy borrowers, but in a completely new way of doing this. It typically was just you would use a FICO score and say, okay, this person's got a good score, good credit score, probably going to pay back their loan. We're going to go ahead and make them a loan. But it was actually kind of hard to find a lot of those people that were even interested, especially if you're a small regional bank, right? Like the Bank of Kentucky, of Hawaii, of Idaho, wherever you might be, you might not have a really full suite of AI capabilities to go out there and find people who would be interested. And so these regional lenders are working with Upstart. They're paying them an upfront fee for generating credit-worthy potential borrowers that they can lend money to, mostly for personal loans. Also getting into auto loans, also getting into other types of loans, but mostly personal loans right now. Excuse me, I'll drink a bit of coffee. Oh, do excuse me. I got so excited about that. I made myself choke and had to drink some more coffee. Upstart, UPST, end of story. Oh, goodness. Okay, off the cuff. Here we go. Back to Upstart. This has been working incredibly well, and their transaction volumes have shown that. We just got first quarter 2025 results, and they showed that they originated 240,000 new loans that they originated, up 102% year over year for $2.1 billion of total transaction volume. And that was up 89% and 19% conversion rates. What does that mean? There's a lot more loans that they originated, right? 240,000 up 100% year over year. Really, really good. $2.1 billion up 89% in total value. Really, really good. And then the 19% conversion rate is up 500 basis points from 14% the previous year. That is out of all the inquiries that they had. They actually converted and recommended 19% of the loans for the regional lenders, which is really fantastic. Not only that, but something else that's also really impressive is that the acceleration of the originations and also the revenue in the recent quarters. Upstart, as we have seen, from the stock price peaking at $400 a share in a very low interest rate environment a couple of years ago, down to $20 a share in 2022 when the Fed had raised interest rates very quickly. This is one that is very, very highly exposed to the macroeconomy and highly exposed to what interest rates are doing out there and whether people want to borrow or they don't want to. And so when we look at the transaction volume, going up 102% year over year this quarter, that's an acceleration from 68% growth in the previous quarter, which was also an acceleration from 30% in the previous quarter and an acceleration from the negative 6% growth year over year in 2024's second quarter. So really, really good. And on top of that, the conversion rate is increasing from 14% to 19%, a good sign that there's not only more loans, but more of them are being approved. And a reminder that Upstart is not just, throwing caution to the wind and approving everybody that wants to make a loan request. They're actually vetting them very, very closely. That's kind of the secret sauce. It's the AI algorithm that is actually judging the credit worthiness of the people that want to borrow out there. They want to keep a very tidy loan book that they're making out there for regional lenders. Want to make sure they're actually recommending good loans to these financial partners of theirs. But I mean, the metrics themselves on the top line really, really great. The transactional volume growing quickly. The revenues associated with those growing very, very quickly. They do keep a small percentage of revenue from their own income that they're getting from interest. They're holding certain loans on their own balance sheet. A reminder that most of the loans, they'll actually go out there, they'll make the loans, they'll either just collect a referral fee from their regional lenders straight up front, or they'll actually purchase the loans and then sell them off by securitizing them and selling them to other investors. But there's a small portion of the loans that Upstart is actually keeping on its own balance sheet and actually collecting interest income off of that as well. In fact, it's worth about $814 million of credit risk that they have on their own balance sheet right now that is not being sold off or securitized to other lenders. And the interest income that they derived from that was $40 million in the first quarter. Extrapolating that a little bit, that'd be $160 million on an annual basis. And out of $814 million of credit that they're keeping on their balance sheet, that's about a 20% APR. That's a very high interest rate. It's a much higher interest rate for a personal loan than you would probably get from a bank or a traditional lender. This is a kind of a new way of bringing more people into the pool that aren't out there sitting with 800 credit score, or at least from FICO. These might be people that can't get a loan from the bank, but Upstart still thinks that there's a very high likelihood of them paying it back. So a little bit more risk. You should be aware of that as an investor, but so far so good in terms of people paying back the loans that have been made. Another thing that I wanted to point out is that the full-year forecast of 2025, they raised the revenue of up to $1.01 billion, now more than $1 billion in annual revenue. Previous guidance was for a flat $1 billion for 2025. They raised their net interest income to $90 billion, previously expected to be $80 billion. And then they raised their adjusted EBITDA margin to be 19%, where their previous guidance was for 18% for the adjusted EBITDA margin for the full year. And again, worth pointing out that the adjusted EBITDA during just the last quarter was $46 million, very profitable business that a year ago was actually losing $20 million in the first quarter of 2024. So I like Upstart. I think this is a really cool company. Again, it's a very volatile company. It's one that's very, very highly tied to the macro and what's going out there. The final thing that I want to say about this is that right now, when you hear them talking about their forward guidance, they're saying, hey, we're not factoring in the impact of a cut of interest rates from the Fed. They're not factoring in Jerome Powell coming out there and say, hey, we're going to decrease the Fed funds rate to stimulate the economy a little bit more right now. If that does happen, that is an even better cherry on top, icing on the cake that would probably stimulate even more loans and even more originations here in 2025. I think that Upstart is getting back into growth mode again. And then the final thing that I'd like to say, 30% short interest. This has always been one of my favorite parts of the investing thesis. I don't base an entire thesis on trading trends or on technical analysis, but 30% short interest is very, very high, even for a growth style like company like this. And we're all familiar, as we saw when Upstart popped up to $80 a share within the last year. When you have a very, very high short interest and the company outperforms its own expectations, gets the confidence of Wall Street back, there can be a very, very quick short squeeze where those shorts will try to cover their positions, and that leads to buying pressure that pushes the stock price even higher. So the stock fell. A lot of people were disappointed with the second quarter guidance. I don't know why. When you look at the guidance and it's saying 86% year-over-year growth, 76% year-over-year growth in terms of the top line. I still think that's very, very strong. I think we're in a very favorable lending environment, and I think that even lower interest rates would be even better for Upstart going forward here. So there's the two: Palantir Holdings, PLTR, Upstart, UPST. Podcast ran for 30 minutes this morning because we had two companies instead of one, but I hope that you've enjoyed it. I hope that you're enjoying this new format. If you have any comments, please follow along at 7Innovator, the number 7Innovator on Twitter X, or at 7Investing, again, the number 7Investing at YouTube. We are live streaming to both of those platforms right now. I'm enjoying the interactive format, and I use all of these kind of check-ins on these companies and the insights that we derive, especially during earnings season, to use for my own purposes for conviction ratings. And with 7Investing, the official recommendations that we have, all of them have got a conviction rating which goes everywhere from best buy to strong buy, hold, potential sell, and sell, and all points in between. All of this is insight to come up with a conviction rating for every company that's active on our scorecard, which is more than 100 companies right now. So going to be updating those again this month after a flood of earnings releases. We've got our subscriber call on Thursday evening where we talk about several of those recommendations. And the next week, I'm going to come out with my 5 best buys for 7Investing for May of 2025. A lot of really cool companies to pick from. Perhaps Palantir, perhaps Upstart Holdings might be 2 that will be considered for this month. So I appreciate you tuning in. We're going to be giving another update tomorrow. The next one that's going to be on our list is going to be AMD here on Thursday, and then Coupang, the South Korean e-commerce company. Those are the 2 that are on the next show, which will be on Thursday morning. Appreciate you tuning in. We'll see you tomorrow. We're here to empower you to invest in your future. We are 7Investing. Have a great day.